Hello viewers, I hope I'm audible. I'll just confirm hello 1 2 3 1 2 3. So hopefully I'm audible. Yesterday I talked at length about tariffs that were introduced by the President of the United States of America, who I respect greatly, Donald J. Trump. And I did talk about bond markets and treasury bonds and how the mayhem in the bond markets could have dictated the pause in tariffs. And so, in today's live stream, I want to talk about treasury markets and how bond markets are so powerful. And I will read live an article that I have come across on the Wall Street Journal. It is titled "The Simple Explanation for This Week's Treasury Market Mayhem." So, let me read that. And for that, I will need to pay closer attention at this. Yeah. So this is by somebody called John Sinru. The treasury market freaked everyone out this week when yields on longer term debt shot higher even as stocks were being bludgeoned and the dollar fell. Now this sentence made absolutely no sense to me. The treasury market freaked everyone out this week when yields on longer term debt shot higher even as stocks were being bludgeoned and the dollar fell. Yields on longer term debt shot higher, which basically means, from what I can understand, is long term debt, that is a treasury bond, say of 10 years, would have less yield. But if it is more profitable, then I really am out of my depth to understand that sentence. So let's read further and let's see if it makes more sense. Over the last week or so, I have read many articles on this and I watched many YouTube clips on this issue. And the clips which have featured economists or financial journalists are the clips I have not understood. So let's see if this is any different. The first sentence does not inspire confidence. But again, I don't understand this, so it is not the journalist's fault. Let's repeat the first sentence. The treasury market freaked everyone out this week when yields on longer term debt shot higher even as stocks were being bludgeoned and the dollar fell. Naturally, traders are wondering why. The immediate suspects include somewhat plausible ideas revolving around complex trading. The immediate suspects include somewhat plausible ideas revolving around complex trading strategies employed by hedge funds to conspiracy theories focused on nefarious dealings by foreign governments. So there are two possible explanations. One is complex trading strategies employed by hedge funds, and the other one is a strategy employed by foreign governments. But the answer might be far simpler. US government debt is doing badly because, well, investors don't want to buy it. Alright, so this is the explanation in the Wall Street Journal, that investors probably don't want to buy US government debt. I've said this in the previous video that the only way a government can raise revenue, can earn revenue, is either through taxation or through selling bonds. Selling bonds is basically a way of borrowing money. If the US government is borrowing money from someone, they are in their debt. So basically, the US government is going into debt by borrowing money from an individual or a corporation or a foreign government by selling them bonds. I hope I have been able to explain this. If you don't understand this, then you can ask me in the comment section. At the moment, they still don't. By they, it is investors. So at the moment, investors still don't want to buy US government debt, that is bonds, treasury bonds. While the S&P 500 rebounded a bit following President Trump's announcement of a 90-day tariff pause, long-term US government debt has not recovered. The yields on 10-year and 30-year debt hovered around 4.5% and 5% on Friday, respectively. So 10-year bond had yield of 4.5%, 30-year bond had a yield of 5%. An aversion to buying treasuries at the moment is actually pretty easy to understand. Let's see if it is easy to understand for us also. Clearly, the Wall Street Journal understands it very easily. The Trump administration's erratic tariff policies have created so much uncertainty that investors have been reluctant to make any directional guesses about where the US economy would be in 10 years. Higher conviction moves, which have involved pricing in a possible recession and tariff induced inflation, have concentrated on short term bonds. Okay, so the long term bet on the US economy is difficult for the investors to make because of the erratic policies regarding tariffs by the American government under the leadership of President Donald J. Trump, as per this article in Wall Street Journal, which I am in no position to understand, much less agree with. First, I need to understand to agree with it. I'm just reading it. When it became clear treasuries would not fulfill the traditional safe haven role, many investors saw even less of a point in holding 10 and 30-year paper. They started demanding a higher reward to do so relative to short-term maturities. It is not surprising that befuddled investors would reach for more complicated answers. It is a natural instinct when things take an unexpected turn. The biggest boogeyman is the treasury basis trade. Torsten Slok, chief economist at Apollo Global Management, has estimated this at around $800 billion. Treasury basis trade has been estimated at around 800 billion American dollars. It involves hedge funds buying bonds while selling futures contracts linked to them to asset managers. The managers often want to be more exposed to higher yielding corporate debt, yet use the derivatives to give them exposure to risk-free treasury returns. This strategy went pear-shaped during the market rout of March 2020, when the prices of the futures sold by hedge funds held up better than those of the treasuries they had bought. The resulting unwind caused a sell-off in government bonds. The more I read, the more confused I get. This is not a simple explanation at all. So we will stop reading this. Okay, let's look at the conclusion. We'll just go to the conclusion directly. The underlying problem will remain. The process of upending the global trading system, which escalated again Friday, is making investors everywhere less confident in holding US financial assets. The ultimate outlet for this is the dollar, which keeps plummeting against major developed currencies and may have much lower to go. Sometimes the simplest explanations simply work best. So what I understood from a cursory reading of this article is that because the Trump administration is coming up with policies that haven't been tried in a long time, certainly not in the aftermath of the Second World War, this is breeding uncertainty, and investors are losing confidence in the long-term performance of the American government. So they are not willing to buy a 10-year bond which will yield 10 years later 30, or a 30-year bond which will yield 30 years later. So they want to buy more short-term debt. That is the thing I can understand. Why is this different? Because usually US government is believed to be the strongest or most reliable financial asset you could buy. So whenever investment is made, the first rule is that there should be return of investment. More than return on investment, there should be return of investment. So you don't want to lose money. So if you are lending $100 to somebody and you expect to get $150 from that person 10 years down the line, the least thing that you should have to worry about is that whether this person will be available 10 years down the line or not. Which entity will definitely be available 10 years down the line? The government. And among the governments, which is the most stable and most reliable and most prosperous government across the world? The American government. So US treasury bonds are viewed as a very safe investment, safe haven in the world of investments. But this safe haven has been losing its attractiveness, losing its attraction, losing its appeal to the wider investor community in the aftermath of the Trump tariffs, and that is what has really upended the normal course of events. And there is the conspiracy theory that maybe it is because of foreign governments holding the bonds, selling them. That is the theory that has been floated by many investors, many people watching the stock markets. But the article in this the article that I read bits and pieces of, this argues that it is a simple explanation that investors generally are losing faith in the US government. That is the opinion of this person. I am not completely in agreement with that. I don't think that this is the right explanation. Probably the right explanation is when it comes to the bond market chaos. Probably it is something to do with the foreign governments. Let's look at another article. This is titled The Intelligent Investor. 4 questions you should ask to combat the market chaos. I'll just try to get to the 4 questions. What do you own and why do you own it? That is the first question. Why do you own stocks is the second question. Third question is what has changed? And fourth question is, if you didn't already own this asset, would you buy it at this price? So let's repeat the questions. First question is, what do you own and why do you own it? Second question, why do you own stocks? Third question, what has changed? Fourth question, if you didn't already own this asset, would you buy it at this price? Let's see the answers that are suggested in this to these 4 questions. First question, what do you own and why do you own it? Meet with your financial advisors, or if you manage your own money, update your measure of how much of your portfolio is in each broad category of assets. You cannot make a reasoned decision about whether or what to sell if you don't know exactly what and how much you own. If you must panic, panic methodically. Of course, in situations like this, it is never advised to sell, but then what do I know about financial markets? Long ago, you should have set a target. You should have set a target for how much of your portfolio you wanted in large American stocks. Now, this is an article published in an American newspaper meant to be largely consumed by American readers, so it may not apply to viewers in India, but I just wanted to read it. If you are above that threshold, rebalance by selling big US stocks and spreading the proceeds across smaller US companies, international stocks, bonds, and other assets. Do this in your tax advantaged retirement accounts first to avoid triggering capital gains. Before you pull any trigger though, be sure to ask what I call the second question. Why do you own stocks? Do you own them primarily because you wanted to benefit from the stability of long-standing trade agreements between the US and the rest of the world? Probably not. Most likely you always owned stocks because you wanted to participate in the long-term growth of the US economy as well as the global economy. That leads directly to the third question. What has changed? There is no doubt that President Trump's trade moves have damaged much of the rest of the world's trust in the US. Just look at how the US dollar and treasury bonds have slumped since March. But people, companies, markets and countries are remarkably resilient. They will bounce back, although anyone who claims to know how long that will take is either a liar or a fool. And markets might not recover on the timeline you need. Look inward. If you are in or near retirement, you cannot wait years or possibly even decades, as full market recoveries have sometimes taken in the past. Moving equal monthly increments of your US stock assets into inflation protected bonds, which still should provide a stream of income that will stay constant despite any rises in the cost of living, can make sense. Finally, ask the fourth question. If you did not already own this asset, would you buy it at this price? Beware of what behavioral economists call anchoring. That is the tendency to measure your gains and losses against a vivid recent reference point rather than against what matters, the price you originally paid. Take Apple for instance. From 2nd April, when President Trump announced his tariff plan, through 8th April 2025, the stock fell 23%. At that point, it was down 31% in 2025. But if you had originally bought it 10 years earlier, you still had a gain of more than 500%. If you'd bought it 5 years ago, you were still up over 160%. Much of the pain you feel is regret over not selling at the absolute peak. Reframe your regret by measuring the latest market price against what you paid in the first place. You may find that you are sitting on a profit, not a loss. Now, the only thing I understand about markets is that you should buy low and sell high. So if the market is falling, I don't see the logic in selling at that time, but I understand that you don't want the market to hit zero. The market overall will not hit zero, but panic selling is a thing. People do it, and they are quite smart people who sell. So I really don't understand it that well. I am not an expert in anything remotely related to the financial market, so please don't take any financial advice from me. This is another nice headline. Market rout shatters long held beliefs on investing. Let's see which long held belief on investing was shattered. President Trump's tariff mania is rewriting the investing playbook. Everyday Americans and Wall Street pros alike have long been accustomed to a steady ascent in American stocks. Wading into buy declines always seem to pay off, often almost immediately. Moments of crises were met with a vigorous response from the American government, ready to unleash stimulus and step into calm markets. Now, the Trump administration's tariffs are challenging the assumptions everyday Americans have clung to for the past 20 years, testing their tendency to stay invested no matter how rocky markets get. By one measure, it has been the worst year for the buy the dip strategy in almost 100 years. Investors who have stepped in to buy shares on sale have instead been stuck with bigger losses. The S&P 500 has dropped 1.3% on average this year in the week after a one-day loss of at least 1%, according to Dow Jones market data. That would be the biggest such decline on record in data going back to the 1920s. Trump's call for a 90-day pause on parts of his tariff plans drove a monster midweek rally in stocks. Still, investors say that they find themselves in uncharted territory and are navigating a market that looks unlike anything they have seen in their careers. The day after the rally, stocks were tumbling again. I had come across this video on YouTube which says that the biggest way in which investors lose money or the stock market proves to be treacherous is the belief in the phrase, "this time it is different." So if you believe that, then it might be a recipe for disaster. But this article clearly says long held beliefs in investing have been shattered, and I don't agree with it. I don't think long held beliefs about investing have been shattered in such a short time. All the articles on the Wall Street Journal are painting a very doomsday picture. So we started with we'll just read the headlines. I started reading this with an article titled "The Simple Explanation for This Week's Treasury Market Mayhem." The next article says 4 questions you should ask to combat the market chaos. All very dark themes. Market rout shatters long held beliefs on investing. Next we have JP Morgan warns economy is facing considerable turbulence. What is next? Okay, so this is different. This is Supreme Court tells government to seek return of man mistakenly deported to El Salvador prison. I mean, that's really dark. Trump envoy Witkoff to make push on Ukraine peace talks in meeting with Putin. So we have moved away from the markets. The US and China are going to economic war and everyone will suffer. Let's read about this. Let's read what this has to say. Okay, let's read this. The gloves are off. The next chapter of US-China decoupling has begun. The pain will be felt everywhere. In jacking up his tariffs on China and pausing steep duties on dozens of other nations, President Trump is pushing the world's two biggest economic powers into a battle that will leave neither unscathed and risks tanking the global economy. The total tariffs imposed on China in Trump's second term now add up to 145%, the White House said Thursday, while China's blanket tariff on American goods will rise to 125% on Saturday after the latest round of retaliation. The tariffs could eventually be walked back, but already there are signs that a portion of the $582 billion American dollars in goods trading between US and China is grinding to a halt. US factories are cancelling orders and some Chinese manufacturers are putting workers on temporary leave. Data has shown a sharp decline in trans-Pacific ship bookings since some of the latest tariff escalations began. American stocks fell sharply on Thursday as investors digested the developments. Arlen Narkisian, a Temecula, California-based kitchen equipment importer, messaged his Chinese agent on Wednesday to hold his latest shipment of cast aluminum plates when he heard that Trump was pushing up tariffs, but it was too late. He said that without a deal to end hostilities between Trump and Chinese leader Xi Jinping, that order from China will be his last. There is no way I'll get any of these in the US, he said. He might have to cut most of the company's 9 employees and contractors, switch to cheaper software, and stop traveling to food shows to advertise his products just to hunker down and survive, he said. While Trump says any pain in the US from tariffs will be offset by long-term gains in jobs and investment, in the near term, investment bank JP Morgan said Wednesday it is more likely than not that the US economy will shrink later this year. In the 23 years since China joined the World Trade Organization, access to its cheap manufactured products has become embedded in the consumer-focused US economy. China accounted for around 13% of all American goods imports in 2024. It is a source of a wide variety of goods, including smartphones, toys, and industrial parts. Entire businesses have been built around assumptions of that access, with design, marketing, and distribution in the US coupled with production in China. It is very interesting to read a prominent American newspaper giving a balanced description of what economic war between US and China would mean. One would assume that an American newspaper would take the side of the American government, but this is not that apparent on first reading. Maybe I am missing something. Many businesses had begun to adjust to a reality of higher tariffs that started during the first Trump administration. Many businesses had begun to adjust to a reality of higher tariffs that started during the first Trump administration. But if the new tariffs remain, they face a loss of access to Chinese production altogether, with profound changes for American consumers. Americans, already stressed from a 24% rise in prices over the past 5 years, could end up paying even more for a smaller selection of everyday goods. For China, meanwhile, a full-blown trade war with the Americans means being shut out of the world's biggest consumer market at a time when its economy has been leaning on exports for growth to offset a painful For China, meanwhile, a full-blown trade war with the US means being shut out of the world's biggest consumer market at a time when the Chinese economy has been leaning on exports for growth to offset a painful property bust and tepid consumer spending. So the problem with the Americans is that this trade war between America and China causes problems for both China and the US. The problem for the Americans is that it will raise prices for certain goods that are imported from China. For China, the problem will be Chinese economy relies heavily on exports, and exports to the American market will suffer. So it is going to hurt both countries. To put it bluntly, we can only hang on for as long as we can. If we can't hold out any longer, we will have to shut down the factory, said Hong Binbin, who runs Shenzhen Jiaoyang Industrial, a maker of stuffed toys in southern China. Sales to the US account for 70 to 80% of the company's revenue, Hong said, and he expects orders to stop coming in thanks to tariffs introduced by President Donald J. Trump. Another Chinese factory, Huizhou Yihai Furniture in China's Guangdong province, is putting its dozens of workers on leave through April 13th, according to a notice seen by the Wall Street Journal, which cited severe shock due to new trade policies. A factory manager surnamed Huang confirmed the notice, which was posted Tuesday, and said he expected to extend the production halt. The world is on course for a disorderly economic decoupling between the world's two largest economies, wrote economists at Deutsche Bank in a note to clients on Thursday. For all the angst over US-China relations in recent years, the two countries' economies are now deeply intertwined. For more than 25 years, Americans have spent a big chunk of their money buying stuff made in China. The US got cheap goods and China invested in building out its infrastructure and climbing up the development ladder. But the relationship created enormous tensions, including lost jobs in American manufacturing towns as well as an ever rising trade deficit. The US exported 143.5 billion American dollars in goods to China in 2024, while 438.9 billion American dollars worth of goods went in the other direction. So that's the trade deficit of almost $300 billion in favor of China. Trump's goal is to eliminate the trade deficit once and for all through tariffs, which he says will help lure more manufacturing back to the US, creating jobs in the US and stanching the flow of US money to China. Hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable, Trump said on Wednesday. At the same time, he gave allies and trading partners a 90-day reprieve on reciprocal tariffs announced on 2nd April, though a 10% baseline tariff on virtually all imports would stay in effect, making clear that the central focus of his trade war, at least for now, is China. So far, Beijing has hit back at each round of tariff increases from the US by raising duties on American products and targeting American companies. Chinese officials have recently discussed with some of the country's biggest companies the feasibility of delisting their stocks from American stock exchanges as a way to limit the company's exposure to dollars and rising geopolitical risks, according to people familiar with the matter. China on Wednesday issued warnings for citizens considering traveling or studying in the US, a sign Beijing wants to put pressure on America's tourism and education sectors. The escalating tit-for-tat actions are having severe repercussions. Financial markets have been in turmoil, with wild swings in stock, bond and currency markets. Economists at Capital Economics said their calculations suggest exports to the US could more than halve in the years ahead, while analysts at Societe Generale said China's exports to the US will be largely wiped out by Trump's latest tariff increases. Amazon.com has cancelled some vendor inventory from China after tariffs were announced, according to sellers. So this is a very long article, and it clearly highlights that both China and America will be at pain, will suffer some sort of pain because of these new trade policies. Trump has a $350 billion American dollar deal for Europe, buy our energy. So we have to keep talking about this, I guess, and I hope I have been able to induce sleep, and we'll talk about this next in a different video. Let's move on to a different topic today. I have been reading this book. I think I can show it to you here. I hope it is visible. Okay, so this book is called The House of the Dead and the Gambler. The House of the Dead and the Gambler by Fyodor Dostoevsky. It's a fascinating book. I want to read a passage from this book, and because stuff in this book is so good. One part I want to read from this book, The House of the Dead. So this is the story from the point of view of a prisoner who has entered prison. I don't know at this stage how long his sentence is going to be, but it is assumed that it's going to be a long sentence in Siberia, in a prison in Siberia. So this is his first evening in the prison, and this is what he has to say. In the evening after dusk, before the prison was locked up, I walked round the fence and an overwhelming sadness came upon me. I never experienced such sadness again in all my prison life. This was written after he was released from prison, so at least he did not die in prison. So let me start again. In the evening after dusk, before the prison was locked up, I walked round the fence and an overwhelming sadness came upon me. I never experienced such sadness again in all my prison life. The first day of confinement, whether it be in prison, in the fortress, or in Siberia, is hard to bear. But I remember what absorbed me more than anything was one thought, which haunted me persistently all the time I was in prison, a difficulty that cannot be fully solved. I cannot solve it even now, the inequality of punishment for the same crime. It is true that crimes cannot be compared even approximately. For instance, two men may commit murders. All the circumstances of each case are very. For instance, I'll just repeat that, sorry. For instance, two men may commit murders. All the circumstances of each case are weighed, and in both cases almost the same punishment is given. Yet, look at the difference between the crimes. One may have committed a murder for nothing, for an onion. He murdered a peasant on the high road who turned out to have nothing but an onion. See, father, you sent me to get booty. Here I have murdered a peasant, and all I have found is an onion. Fool! An onion means a farthing, 100 murders and 100 onions, and you have got a ruble. This is a prison legend. Another murders a sensual tyrant in defense of the honor of his betrothed, his sister, or his child. Another is a fugitive, hemmed in by a regiment of trackers who commits a murder in defense of his freedom, his life, often dying of hunger, and another murders little children for the pleasure of killing, of feeling their warm blood on his hands, of enjoying their terror and their last dove-like flutter under the knife. Yet all of these are sent to the same penal servitude. It is difficult reading, but this is the beauty of Dostoevsky. It is true that there are variations in the length of the sentence, but these variations are comparatively few, and the variations in the same sort of crime are infinitely numerous. There are as many shades of difference as there are characters, but let us admit that it is impossible to get over this inequality, that it is in its own way an insoluble problem like squaring the circle. Apart from this, let us look at another inequality, at the difference in the effect of a punishment. One man will pine, waste away like a candle in prison, while another had no notion till he came to prison that such a jolly existence, such a pleasant club of spirited companions was to be found in the world. Yes, there are some in prison like that. Or take the case of an educated man with an awakened conscience, intelligence, heart. The mere ache of his own heart will kill him by its torments sooner than any punishment. He condemns himself for his crime more unsparingly, more relentlessly than the most rigorous law. And beside him is another who has never once, all the time he has been in prison, thought of the murder he has committed. He positively considers he has done right. And there are men who commit crimes on purpose to be sent to penal servitude in order to escape from a far more penal life of labor outside. There he lived in the deepest degradation, never had enough to eat, and worked from morning to night for his exploiter. In prison the work is lighter than it was at home, there is bread in plenty, and of better quality than he has ever seen before, and on holidays there is beef, then there are arms, and there is a chance of eating, and there is a chance of earning something. And the company, it consists of shrewd, crafty fellows who know everything, and he looks on his companions with respectful astonishment. He has never seen anyone like them before. He looks upon them as the very highest society in the world. Is the punishment equally felt in these two cases? But why trouble oneself with unanswerable questions? The drum beats, it is time to be back in our wards. This is the beauty of Dostoevsky. He asks questions that all of us have thought. He doesn't answer them. He forces us to think about it, and it really makes for engaging reading, makes you think, and it really is sometimes very difficult also. Why I talk about this is I feel that Dostoevsky's works are a continuum. It's like one long story. There are different books, but they are essentially in the same story. The House of the Dead could be a continuation of Crime and Punishment, because in Crime and Punishment the novel ends with the protagonist being sent to the Siberian prison. His life inside the Siberian prison is not described, but is described in House of the Dead, where the names of the characters keeps changing, but it could be the same person. What I really liked about Crime and Punishment is It talks about the psychology of a person after he has committed a crime. An otherwise normal person who could be forgiven for never being noticed commits a heinous crime, and the psychological turmoil he goes through after committing the crime is the main crux of Crime and Punishment, which is an amazing exchange of dialogue between the investigator, the chief investigator, and the person who has committed the crime. This is very similar to what was shown in Adolescence, where again somebody who you wouldn't expect to have committed a crime does commit a crime, is easily apprehended, and how he is brought to justice is what is the main plot of Adolescence. So thank you for sticking with me during this live stream. I know I read some parts of the Wall Street Journal which were difficult to understand, and some parts of Dostoevsky which are difficult to forget. But thank you for sticking with me through till the end. See you.